Hey guys, this is Prashant Kumar from Cashflow Champs. We here at Cashflow Champs helping investors gain financial freedom through passive investments in real estate. I am managing partner at Cashflow Champs. Welcome to the Wealth Creator Call. Here is what you are going to learn. Why real estate is the ideal model for investing. What are the benefits of passive investing in real estate? And how have we helped investors in past to gain financial freedom? So let's dive in. But first of all, who we are. We are multifamily operators. We have done 17 plus deals so far in multifamily world. We have $146 million worth of assets under management. We have completed 7 full life cycle deals and total transaction worth more than 250 millions. We currently have about 1,640 units under management in various states like North Carolina, South Carolina, Georgia, Florida, Texas, Indianapolis, and Arizona. Cashflow Champs is a privately held investment firm that focuses on acquiring and managing opportunistic and value-add multifamily real estate properties. The firm specializes in repositioning well-located assets in emerging markets surrounded by positive demand drivers such as population growth and job growth. Cashflow Champ partners with entrepreneurs and busy working professionals interested in real estate investing, but who lack the time to navigate the process. Alongside our partners, we aim to bring purpose and profits in a manner that allows us to improve the lives of the residents in our communities and the neighborhoods where we operate. So what is Cashflow Champ's ideal model for investing? We have 5 pillars that have taken us to over $250 million in transactions. Those 5 pillars, the ideal model has allowed us to help dozens of people become financially free. You must have all 5 pillars to be successful. We partner with individuals to acquire assets. One of the examples here is we bought a property, 130 units, 7.8 million, equity raise 3.8 million, and we do that all the time. So let's look at our pillars. The pillar 1 is income. What most people do, invest in employer-sponsored plans. They invest in stock market. They focus on accumulation as opposed to cash flow or income. Why it is wrong? People do not have control over their investments. They invest in 401k, stocks. They don't understand why they are investing in them. Their focus is to accumulate the portfolio instead of cash flow. What you should really be doing is invest in stable, tangible assets as opposed to paper assets. Invest in assets that you can control. Invest in assets that provide cash flow, what you live on. Focus on money coming in as opposed to accumulation or value of the stock portfolio. A few of our clients have been investing with us for years, and they trust us over other operators. As trusted advisors and operators, we help our investors understand the true power of passive income in real estate. Let's see what this investor has to say.
Adam Adams. I am an apartment investor and a passive investor. I am pretty picky on who I invest passively with. I need to really resonate with somebody. I really need to feel that trust with somebody, with another operator, before putting my money, because we've all heard a lot of horror stories. We've all heard that things don't always go perfectly. And so when it's my capital that I'm putting in somebody else's deal, I just want to make sure that that's going to be safe, that's going to be protected, that I get along with the operator, and that I trust them. And this was in 2019, I met Prashant Kumar. I was actually a sponsor at an event, Best Ever Conference, hosted by Joe Fairless. And as a sponsor at the booth, I got to communicate with tons of people that were there. And Prashant came to ask a little bit about questions, what we do. And he and I ended up really hitting it off. So we talked and talked and talked. I couldn't tell you how long we talked, probably a couple of hours. And I recognized his integrity. I recognized from him a lot of the passion that he had for doing a good job and making sure that his past investors were protected. And I remember that really stuck with me. And so later on, my sweetheart and I were ready to start being passive investors in more deals. We had already been passively invested in 2 deals at the time. And this opportunity came through Prashant Kumar, and it was a 458 unit in Huntsville, Alabama. And so I remember just calling up my sweetheart and let her know, hey, I think we should co-invest in this. And she said, all right, do you trust him? And I said, absolutely. I spent a lot of time with him, and he's the type of person that I really feel that has that integrity. And that's exactly what we've seen ever since we put our money with Prashant in this deal.
All right, let's jump on to our next pillar. 2, depreciation. What most people do, they do not know what depreciation is. They do not understand how depreciation can benefit them. Individuals are not leveraging the power of depreciation. Depreciation can serve as a tax shield. So it is wrong that people should understand the meaning of depreciation, basically. What you should do is invest in asset classes that provide true depreciation tax benefit. For that, understand how depreciation and cost segregation can benefit you. Why it is right. Depreciation can serve as tax shield. Depreciation can make investment opportunities more enticing. As trusted operators, we help our investors maximize the depreciation benefits, which help them save on taxes.
Hello everyone, I know Prashant Kumar for the last 14-15 years. We've been working together, and he's the main driver, and he was the one who introduced me to this real estate, investing in multifamily homes. So far I've done a couple of deals with Prashant, one in Atlanta and one in Alabama. So far I'm very happy with the returns of whatever they have promised. They have provided us. In some cases they've even exceeded what they've promised. Usually when they project and when make the pitch, they're slightly on the conservative side, but they work really hard and make sure the money is protected, and they provide you proper guidance, and they also give you quarterly reports on what's happening, how things are progressing. In all, it's been a good couple of investments through Prashant and his company. I'm looking forward to invest more if any good opportunities come through Prashant and his company. Thank you.
All right. The next pillar that we have in our ideal model at Cashflow Champs is equity buildup. What most people do, they build equity in their primary home, but they do not understand how the same concept can be leveraged in commercial real estate. Most people do not fully understand the power of equity buildup. Why it is wrong? Individuals are not leveraging the power of equity build-up at scale. Individuals do not understand how to force equity build-up and become susceptible to changes in market. What you should do is invest in asset classes that allow you to build equity at scale. Why it is right? Equity build-up can make investment opportunities more enticing. Through passive investing with us, investors adopt long-term approach of equity build-up while not getting involved in day-to-day operations of real estate. That's the fundamental benefit of passive investing. Let's see what one of our investors had to say. As an investor, I care about the intersection of purpose and profits. After investing with Cashflow Champs team, I realized that through real estate, we can improve the lives of residents, improve a community, fill a gap in housing, and profit in the process. It is a win-win. Jumping on to the next pillar, appreciation. What most people do, invest in a single family home. The value of the single family home is dependent on the value of neighboring homes. Let the market control the value of their homes. We typically do not have the control over the value of our property because it is being determined by the value of neighboring homes. It is wrong because you cannot control the change in the housing market. Negative externalities can bring the value of your home down. Negative externalities like rundown neighboring homes. Anything could happen in the neighborhood that could bring the value of your property down. What you should do is invest in commercial real estate, so you have more control. Understand the difference between natural appreciation and forced appreciation. In commercial real estate, we incline to do a lot of forced appreciation by adding the value of the asset and by improving the income of the asset. The appreciation, whether it is natural or forced, can make investment opportunities more enticing. Understanding forced appreciation gives you control over the value of the asset. As established operators, we are able to achieve forced appreciation and are able to pass the benefits to our investors. Let's see what our investors are saying. We all know that we should be investing in real estate. It is an asset class that has withstood the tests of time. The real task is finding a team that you can entrust your hard-earned money with. One that has a solid track record, but also one whose leadership has strong morals, values, and ethics. That is why I choose to invest with Cashflow Champs team. Thank you, Melissa. What most people do, pillar number 5, what most people do is they avoid debt because they were taught it is bad. They end up buying properties in all cash, or many times they use too much leverage. Why it is wrong? The debt can help you acquire larger assets. There is a significant difference between good debt and bad debt. Financial institutions give more favorable terms to larger loans. Our commercial real estate has larger loans, and financial institutions give us more favorable terms than a single family home. What you should do is to understand the difference between good debt and bad debt. Invest in commercial real estate so you can take advantage of leverage. Leverage can make investment opportunities more profitable. Leverage can help you scale. And we, as established operators, get favorable terms from financial institutions, and we are able to pass the benefit of those terms to our investors. So if you are buying a single family home, you do what you are worth. The terms that you get from financial institutions are based on your own credits. But here, because we have stronger relationship with these financial institutions, and financial institutions tend to give better terms for bigger loans, we get a gaining more benefit, and we are able to pass that benefit to our investors. So, for your Cashflow Champs Wealth Creator call, have a pen and paper ready. Be ready to take and learn notes, jot down any questions that you may have, and reach out to us. Let's see what some of the investors have to say. So thank you so much for your time. Set up a call with us. We would love to hear from you.